Welcome to the World Financial Symposium's Market Spotlight webcast series. Today's conference will start in a moment. The WFS is dedicated to educating technology leaders through webcasts like these and the Growth and Exit Strategies Conference Series held in London, New York, Silicon Valley, and other tech and financial centers around the world. The speakers and sponsors of these live events read like a who's who of industry leaders. To learn more about our live events for CEOs, owners, and investors, or to access our library of on-demand spotlight webcasts covering markets like IT security, health tech, gaming, and more, please visit WFS.com. And now, let's join today's Market Spotlight webcast.
Good morning, good afternoon, or good evening to our global audience. I am Ejeu, Vice President of Mergers and Acquisitions at the Quorum Group. I'm based in Paris, in charge of M&A advisory for software and IT services firms. Before joining Quorum, I was an entrepreneur and CEO of 2 firms based in France. It is terrific to be working with the World Financial Symposium for this market spotlight on French tech M&A. Our agenda today will start with an M&A research report presented by my colleague Becky Hill, who will present an overview of the dynamics, the valuations, and the recent deal flow of the French tech M&A market. After that, we'll move to what should be an excellent panel discussion, where I will be joined by Hélène de Cointet, co-head of Safran Ventures, Jean-François Rivassou, investment director of Ejeu, and Martin McCord, executive vice president of strategy and M&A at Gemalto. Before handing the presentation to Becky, let me say a few words about Quorum. Quorum is headquartered in Seattle and has a team in Paris, Berlin, London, Zurich, and Amsterdam. It focuses on selling software companies and has closed over 300 transactions, of which about 180 were cross-border. Here you can see a few examples of Quorum deals that involve the French seller or buyer. In Quorum webcasts, we often cite a global supply crunch as the reason that is driving buyers and sellers across borders. To explore the impact of that crunch in France, a market many believe to be self-sustaining, I'll hand it over to Becky from Quorum's research team.
Thanks, Jabir. Like the global market as a whole, French M&A hit a peak in 2015, decreasing as supply began to run low. However, the number of acquisitions made by French acquirers held steady through 2016 and 2017, even showing the slightest of increases last year, driven by activity from buyers across sectors. Note that the total number of tech deals from those buyers remains small, only about 1 per year. Even as a French company, there is no one French firm you're sure to sell to. With few M&A opportunities during the year, French buyers, like buyers around the world, have had to look outside their borders. 62% of French acquisitions over the last 5 years have been cross-border. When we break down that number further, we see that most deals are done with other European nations, particularly the UK, Germany, and the Netherlands. However, the United States remains the top destination for French tech acquirers. On the sell side, we see that the majority of French companies will be acquired by foreign buyers, again underscoring the need for a global process, which can increase your valuation and open up your company to a world of opportunities. The United States remains the top partner for French sell-side, acquiring over a quarter of French targets over the past 5 years. In Europe, we see similar patterns as the UK, Germany, and the Netherlands remain at the top of the pack. When it comes to valuations, French software companies are often stuck on the low end, with over half the exit value since 2013 under 2 times revenue. But as the graph moves into higher valuations, what it doesn't show is a change in buyer geographies. The top 4 valuations for French software companies, including one at 19 times revenue, were all in deals with American buyers. Undervalued at home, French companies that go global in their buyer search can also find those higher American-style multiples. Now let's break down some deals. Starting with our connected health trend, Wright Medical Group from the Netherlands acquired Imascat for $62.5 million in December of last year to add its 3D shoulder surgery technology to Wright's suite of implanting inventory. In the United States, FactSet Research Systems bought BSEM in March last year for just over $205 million to create scale and bring BSEM's risk systems into a broader market. Highlighting a smart logistics deal, geolocation and logistics SaaS firm Optologistics was acquired by Brazilian MapLink to drive the creation of new, more efficient solutions for its customers. In the RegTech space, another one of our top 10 trends, Wolters Kluwer acquired operational risk management SaaS firm Enablon to advance further into the global compliance market. In February this year, Canadian network monitoring and analytics solutions provider Ejeu acquired customer experience SaaS firm Acilia for about $32 million to help operators keep pace with the quickly changing industry and to deploy infrastructures in the 5G disruptive trend. In an entirely domestic deal in January this year, Ejeu was bought by Sodexo in another trend-driven bricks-to-clicks composite commerce deal. Moving into the UK, the top acquirer of French companies, Clarinet, acquired IT infrastructure services provider Dieudonné to expand and strengthen its international footprint. Finally, Germany's Senate acquired product lifecycle management software solutions provider Theonis for $6.5 million to complete its PLM solution portfolio. There is no crystal ball for M&A, but when we look at the upward trends in funding and investment deals, it's impossible to say anything but that the future of French companies in the M&A market looks bright, so long as they stay mapped to the trends driving the tech market forward.
Thanks, Becky. I'd like to have each of our panelists introduce themselves and their firms, starting with you, Hélène.
I'm Hélène de Cointet, and I am co-heading Safran Corporate Ventures, which is the corporate venture arm of the French, though international, Safran Group, which is a major aerospace equipment manufacturer group, very well known for aircraft engines, aircraft cables, and now aircraft seats, etc. So Safran Ventures, we've been created 3 years ago to invest minority shares in startups which have developed technologies or business model with which the group can work and cross-fertilize. The first aim of Safran Venture is to be a strategic open innovation tool. So when we invest, we make sure that not only we bring money, but also we bring knowledge of our space industry, aerospace clients, aerospace technologies, knowing that, of course, we invest also in startups which are not in aerospace, but which technology can go to aerospace. Having said that, we are a pure fund in the sense that we are a regular investor. We have an envelope of 50 million euro to invest tickets between 1 and 5 million. Typically in Series A, Series B, in France, but also international, of course. We only make co-investment with strategic or financial investors.
Excellent. Thank you very much, Hélène. Now to you, Jean-François.
Hello, Jaber. Hello, everybody. Very pleased to be with you. I'm Jean-François Rivassou, and I'm an investment director with Ejeu. At Ejeu, we call ourselves a French tech entrepreneurs fund. We have a very strong DNA both in tech and in entrepreneurship because of our strategy that dates back from 2010. At that time, the company has been created by 4 entrepreneurs of the digital economy. Pierre Kosciusko, who sold his company Price Minister to Rakuten, Geoffroy Roux de Bézieux, who sold company Virgin Mobile to Altice, and Stéphane Trépos, the chairman of Sarenza, which is sold very recently to the Casino Group. Fourth one is Auriel Ohaillon, a mobile expert. And these guys wanted at that time to create an entrepreneurs fund, which is a fund that really supports entrepreneurs in the web and the software area to develop with backing from people who just don't bring only financing, but also try to help as much as possible. And for that, which is very unique at Ejeu, we've created a very strong ecosystem of LPs, which are entrepreneurs themselves. So people who sold their companies that back us, and this network is very, very strong and efficient. So as of today, we've got more than 130 entrepreneurs, which probably makes us the largest entrepreneurs fund in Europe, and for sure is very unique in France. Our team is based in Paris and New York. We've got 2 different branches. One is a VC activity. We've got the part of the team that works on VC deal with a focus on Series A. And the other activity is gross equity activity focused on small caps. And what we do is twofold. We do tech growth, so injecting fresh cash in companies that have already gained some maturity. So it's not like stage venture. So we focus on profitable companies. And also branch is growth buyout. So the idea is to take over a minority part of the cap table of companies in order to clean it and make it ready for a new phase of development of the company. As for myself, part of this growth equity team, and my background is hybrid because I work in tech companies as well as in VC funds.
Thank you very much. And finally, to our strategic acquirer, Martin.
So Martin McCourt, Head of Strategy and M&A and CMO at Gemalto. Gemalto is about a €3 billion revenue company and a serial acquirer. We probably do about half a dozen deals a year on average, and we've been doing that for almost a decade now. We do three types of deals typically. We buy tech startups to get technology bricks that we don't feel we could develop internally. We buy companies to increase our market access to a specific customer group or to a geography. And then every so often we buy growth platforms, so moving out into an adjacent business. We try and buy a leading player to establish a beachhead in a new market.
Thank you for that. My question to each of you, what are the challenges and opportunities that you see for the France-based acquirers or investors in today's global market? Let's start with you, Hélène.
So this question is actually very, very wide, so I'll take just a few angles. Maybe the first angle is on the French startup scene. Is France an attractive market for investors? I believe yes. I believe yes for many reasons, namely, first, in terms of technology, we don't have to be shy. French market is of very, very good quality for technological development, thanks to our universities, but also our research centers, which are worldwide known, and a global ecosystem which is developing and accelerating in promoting technology and startup creation. So for that angle, for the techno angle, I think France has to be seen by investors. We have, however, difficulties in our startups. I would say that our CEOs and our teams are probably today more focused on the technology rather than the go-to-market. It's probably a weakness of a French entrepreneur, although I tend to believe that they are getting better and better in that sense to think more of the market needs rather the techno angle. Another good aspect of French ecosystem or French investment is the price. For the moment, French startups are still way cheaper than US startups at the same quality, I would say. It's also an opportunity to invest in French startups. If we don't look at the French startup ecosystem, but rather the French investor ecosystem, I think that one issue, but it's not really an issue, but it's a characteristic, and it's a characteristic that we have seen also in other markets. The investors tend to only invest in their own country. And this is a pity because technology are now worldwide, and not only looking at what happens in our country is really a pity in terms of mind openness and even a real benchmark. And in that sense, corporate venture like us, but also Siemens or G, of course, etc. So corporate ventures are more global, and I think it's a good approach to have.
Thank you for that comprehensive overview of the investment and startup scene in France. What challenges and opportunities do you see, Jean-François?
Of course, there are many challenges, but I guess the main one is to be less shy, both for funds and for corporates, because the French market, I feel, is ready and is well structured to be very active. You've got corporates with healthy balance sheets and deep pockets and very willing to do acquisition. They've got some experience, and also they are tech conscious right now. They know that the market is definitely global, so this was not the case maybe 5 or 10 years ago, but right now I feel they're ready. And also on the financial side, the funds also are ready to invest and also to provide financial solution at every stage of development for tech companies. There used to be a lot of early stage venture fund. Now you find late stage venture fund. And we were one of the first funds to open the growth equity activity in France, and now we can see various funds doing also a type of growth equity activity for tech companies. Each of them has a very different angle, but I would say the dry powder and the technicity and knowledge on how to support tech companies is there. So main challenge is I think the world know about that, and of course doing the deals. It's real marketing that we do and need to do more towards CEOs.
Well, that's excellent. More mature market, more money available, and more expertise.
And also nicer stories. I mentioned few interesting deals from large corporates that make interesting acquisition. French corporates like Michelin, who bought Allopneu or Black Cycle in the UK, Ejeu, who bought Mr. Auto and Aramis, and very recently Carrefour just bought one of our portfolio companies, Etoc, and this is very exciting because they buy very interesting and mature companies. It shows it's very virtuous.
That's very exciting. Martin, how do those challenges and opportunities look from your side of the table?
I think one practical difficulty is that we're based in France or Europe, and a lot of tech firms are in the US, if not on the West Coast. Lack of geographic proximity is a bit of a handicap in sale processes, because typically, the first time we get to meet some of these companies is at the management presentation, and there's only so much you can do with PowerPoint slides when you don't meet people. I don't know if other companies are organized like us, but we don't have M&A people spotted around the world. There's a central corporate team that does all of the M&A, and that lack of kind of informal contact earlier in the process is definitely a handicap. And what I've actually seen as a reaction to that is more and more kind of savvy sellers are organizing like fireside chats and very early pre-marketing on some of the companies they're coming to market with to help European-based buyers get more comfortable and familiar with the targets and especially the management teams before a formal sale process starts. So I think that's maybe one of the bigger challenges for us, and I think for French or European-based acquirers. And then the other one often historically has been just valuation, in that, again, American tech companies tend to go for very high multiples that often European acquirers are just not comfortable paying, because there's such an assumption has to be made on future growth, whereas I think, Europe tends to think more in terms of industrial multiples. So it takes a little bit getting used to, which links back to the first point, that getting to know the management team early helps to build confidence that what we're seeing in a management presentation is not just Excel, but there's something behind that. In terms of opportunities for French acquirers, the one point that would come to mind would be just the strength of French engineering talent, because we're often doing tech acquisitions, and it's important to be able to integrate that into our global network and with our French R&D centers. And just the caliber of local talent is very good, which facilitates integrating new technologies to our historical teams.
Thank you, Martin. Very interesting. All of your answers together give a good outline of the landscape. Now, let's speak maybe more directly to the company owners and CEOs who are listening.
who may be considering investment or M&A, maybe soon, maybe in the future. What advice do you have for them? Hélène, we'll start with you again.
If you're talking to a French investor or a French acquirer, don't oversell. Don't be too on the selling marketing mode, because the French person in front of you will, you would lose, credibility to this person. We are not as marketing and salesmen and women as American ones, I would say. And we prefer having more technical discussions with facts, in a sense, maybe more scholar, more than brilliant. This is a bit a stereotype, but this is what I feel. The first is to build trust with your interlocutor by being focused on facts and technology and your uniqueness. And of course, at the end of the meeting with the French investor / acquirer, if you can tell that you like wine and invite him or her to have a glass of wine somewhere, it will be always a good idea.
Wonderful. I like that idea. Jean-François, what advice do you have?
My main advice would be for CEOs to be really aware of all these options and all the toolkit they have. Basically, first, what we experienced over the past years is we've seen many CEOs knowing quite well the environment, saying, okay, I finance my company Series A, Series B. Sometimes they manage to go for Series C and they say, okay, let's sell the company. This is true for a hyper-growth company. Not all the companies are hyper-growth, and it doesn't mean they are not decent and very exciting companies and with beautiful stories. In that case, people will tend usually to sell quickly their company because they say this is the only way to get out. And I would feel they do it without enough preparation. So the advice is know all the possibilities you have. One is to really assess where you stand in your development cycle as a CEO. Do you feel you've done all you want to do, or feel there's a strong potential that you cannot address because for many reasons, either you feel frightened to do that, you've reached 10 million euro and you feel the next step is really challenging, you don't know how to address that, and it would put your company at risk and of course your money at risk. Other thing is you have sometimes investors that want to exit your cap table, and this would push you to sell your company, and maybe not for good reasons. As I mentioned, now you've got a financial solution at every stage. And we, Ejeu, for example, we promote quite a lot OBOs, which are the LBO centered and focused on the owner, which is the founder, and that can solve these two main issues. One is providing liquidity to historical shareholders, and the second one is also providing some cash out for entrepreneurs. And with that, it gives a new time for development for the manager. He is more comfortable because he has secured a little bit of cash with the cash out at the time of the transaction. And he can really assess from a strategic point of view the development of his company, and no more from just because of the constraints he has on the cap table. And we position ourselves as the partner to help company grow at this newer stage and take additional risk, develop internationally, structure yourself. To sum up, the marketing that needs to be done to say the structure is there from a financing point of view, it has to be done to everybody and to CEOs to work more closely with funds and to assess the opportunity of working with growth equity funds, something of course very developed in the US, in the UK. It's very new in France, and we feel it can bring a lot of very nice story in the future.
Excellent. Thank you very much for your comments and insights. Martin, what advice do you have for CEOs considering selling, especially to a French or European acquirer?
Well, building on my previous answer, I think the fireside chat approach, getting out early to get to know your top potential acquirers is time well spent, because it's easier for the CEO to come to Europe for a few days and do the rounds of his top half dozen target buyers to do it that way than the other way around. So I think I'd recommend that. And then the second goes also back to the other point I was making around valuation, where often the valuations or the expectations that are set by sell-side bankers can be high. And in a few cases, I've just said, well, that's the expectation. I'm not even going to participate in the process. And I've seen a few processes collapse because of that. It doesn't happen often, but it does happen. The expectation is set so high that people say, well, then I'm not going to waste my time working on the process. So obviously, there's the other approach where the bankers don't say anything at all and they say, well, we'll let the market determine what happens. So we could all be wasting our time. But I think it has to be played very carefully, the question of setting expectations on valuation.
Let me follow up with a related question. After you've made an acquisition outside of France, how do you retain that talent in a French-based acquirer?
I think that's actually one of the biggest challenges, and it actually pleads a little bit in favor of European-based startups because, not wishing to fall into stereotypes, but in the US and particularly in the West Coast, there was so much money available or hoped for on the sale of a company that the expectations from especially senior management can be very high, and it makes it hard for European buyers to retain the management team because we just can't meet their expectations in terms of retention or future monies. Just the churn rate among startups of high-tech employees on the West Coast is high when you take out the retention effect. So I think in terms of the audience, I think it's definitely a point that the European-based companies can play on is what is their historical retention of people being like. So what's the churn, and to try and talk through that with potential buyers to show that it's a question that's been thought about and addressed. Because if we buy a 50-person startup and the top management team leaves to go to their next startup because they've always worked with the same VCs and they're just flipping from one project to the next, then you're not a very happy buyer. So I think it's something that CEOs and sellers need to think about, is how do you get the buyer comfortable that the human capital in the business will remain going forward.
Interesting. What do you think the strengths are of a French acquirer when it comes to talent retention? In the US, for example.
It's tough. And in fact, while I've been in this job, we've never done an acquisition on the West Coast. Mostly for that reason, because I'm very concerned about the ability to retain talent. So I don't have an easy answer to how to do that. Now, obviously, money is part of the solution, but it's not an eternal solution. You just can't pay very large retention sums in perpetuity. It doesn't really work. People get bored and they want to go on to the next project. I think for younger people in the team or less senior people joining a worldwide group, mobility work in terms of working on different topics and different locations can be a pull, but I think the concern usually focuses on the top team, and it's not so easy for European acquirers to retain them.
Well, thank you, Martin. As you say, that difficulty translates to an advantage for French and other European firms considering M&A. Thank you to all our panelists for participating. Let's go now to some closing thoughts. As we have heard during the M&A report and from our panel, France has a vibrant tech M&A scene with a well-educated talent pool, excellent technology firms, and sophisticated buyers. French tech firms tend to sell for lower multiples than international averages, but international buyers in particular are willing to pay a premium for disruptive technology in France. French tech acquirers are keen to buy abroad and did so in 65% of the deals over the last 5 years. They would like to acquire more US companies but are rebuked by high valuations and cultural differences. And as Martin explained, the most complex issue for French acquisitions of US tech firms is staff retention, particularly in Silicon Valley. Having said that, our panel advises French CEOs and buyers to be more self-confident when acquiring internationally. So my last word is that with the increase in funds available, the development of a more entrepreneurial culture, and the globalization of the market, the future of French tech M&A looks brighter than ever. Now, thank you all for your attention. If you have any question, please send it to us, and we will be pleased to answer it. And now, let's go to close.
We hope you enjoyed today's online symposium. If you have any questions not answered, please submit them to info@wfs.com. We look forward to seeing you at one of our upcoming live events in a city near you. To register for these live events, view upcoming webcast topics, or hear rebroadcasts of this or other market spotlight events, please go to wfs.com. Thank you for attending today's webcast.